This is Money and Metals for the week ending April 17th. In money news, the U.S. dollar skidded to a 10-day low against a basket of major currencies after a run of weak U.S. economic data that cast doubts on prospects of the Federal Reserve raising interest rates. The greenback had rallied as much as 30% since May of last year, hitting a 12-year high in March and getting close to that area again. However, with the doubt in the U.S. economy and showing some weakness, people are starting to wonder, and the markets especially, if interest rates are going to be raised anytime soon. The latest numbers showed U.S. housing starts rose at a less than expected rate, which suggests the economy is still struggling. Traders will be watching U.S. consumer inflation data for further clues on the state of the economy. The dollar index fell to about 97, its weakest since April 7th, and is on track for a more than 2% drop this last week. Benefiting from the dollar's weakness, the euro had one of its best weeks in a month against the greenback, rising over 2%, on growing concern that the Greece debt crisis will lead the country to default and eventually to leave the eurozone. It was 0.6% higher on Friday at 1.08 relative to the dollar. According to our sources, every corporation in Europe has its stage set for the contingency that Greece may exit the euro. We'll have to stay tuned on that, of course. The pound sterling also benefited from the dollar's weakness, enjoying its best week in 5.5 years, despite a looming high uncertainty parliamentary election in 3 weeks' time. In the currency markets, Bank of America has settled its portion of a U.S. antitrust lawsuit in which investors accused 12 major banks of rigging prices in the foreign exchange markets. The settlement with the second largest U.S. bank was disclosed Thursday by Scott & Scott, a law firm for the investors. Terms were not disclosed. Bank of America is the third bank to settle investor claims related to the $5.3 trillion a day currency market. J.P. Morgan settled for $99.5 million in January, and Switzerland's UBS settled for $135 million in March. Scott & Scott said Bank of America's settlement will mirror the early accords and that the bank will cooperate with investors in the remaining litigation. The settlement resolves claims that Bank of America conspired with rivals to manipulate the closing spot rates known as the fix in chat rooms, instant messages, and by email. Investors, including hedge funds and pension funds, said that the 12 banks controlled about 84.3% of the global currency markets in 2013. Last November, Bank of America agreed to a $250 million fine to resolve a currency rigging probe by the U.S. Office of the Comptroller of the Currency. According to the investors, traders used disguised names to rig currency prices through practices known as front-running, banging the door, and painting the screen. The chat rooms were called the Cartel, the Bandits Club, the Mafia, and One Team, One Dream. Interesting. Free and fair. What can I say? In gold news this week, gold has struggled with the $1,200 level that we've talked about prior programs, and we are up over the $1,200 level. Gold is showing some strength here, but again, as said earlier, we'll have to watch the $1,200 level. Love to see that level established as a floor and gold start to edge its way higher and higher and higher, seeing the $1,200 level as a firm bottom. That is yet to be determined. Also, the World Gold Council, which has numbers that we question at times, has stated that it looks for China to increase its gold holdings by perhaps 25%. Interesting. For the record, China and India continue to accumulate gold, even though, as reported last week, India has this scheme about getting gold out of temples. And even the World Gold Council is suggesting that China's gold appetite is unabated and may increase in the future. On the very near term, China actually decreased its imports for the week, but that's only a 1-week event. And from the long-term perspective, it looks as though both China and India will continue to accumulate gold. And in silver news, one of the more interesting stories in a very long time. Marine salvage experts have recovered 50 million in silver coins from a ship sunk by a German submarine in 1942 as it was transporting silver from India to London to help finance British war efforts in World War II. By the way, a side note that the Indian Army at the time was not going to accept British currency. They wanted to be paid in silver. That's not in this article. Deep Ocean Search, a firm in charge of the salvage, said that the recovery from the wreck was a world record. The ship was broken in two and buried deep in the seafloor. Parts of the ship had meters of mud heaped upon it, and Deep Ocean Search said on its website, operating at this depth caused several serious technical difficulties. This ship was a mixed cargo and passenger ship and was carrying 296 passengers and 100 tons of silver coins belonging to the British Treasury. It was spotted by a German U-boat in the South Atlantic and sank after being hit with 2 torpedoes. In all, 192 of those people on board survived in lifeboats until they were picked up by passing ships and dropped off in either St. Helena or Cape Town, South Africa. Deep Ocean Search started looking for the wreck in 2011 and eventually found it lying on an underwater slope in the foothills of the Mid-Atlantic Ridge. The operation was completed in 2013, but was under wraps until this year. After Deep Ocean takes its cut under international maritime salvage rules, the remainder of the treasure will be returned to its original owner, the British Treasury. And that's it for this week in Money and Metals.